take time. I think this is all a very slow process and it's going to take time. And you said keyword guidance. Guidance is so important. And I talk about that all the time in investing. It's about the future expectations of companies. And so always looking at the guidance. We have margins compressed, higher cost of debt and capital, which is key, especially for smaller caps. Smaller companies are more sensitive to the rise in rates and, higher cost of labor. We have a tight labor market. We have higher cost of production, lowered productivity, all of these different factors going in. So it's definitely a lot going on in this environment on the micro and the macro level. So what I want to talk about regarding the markets is how you're able to do almost 50% return in quarter one. Tell us some thoughts. What are your best trades so far in quarter one, Andrew?
Yeah, best trade so far. So our whole philosophy is let's think like I'm a swing trader, so I'm fairly active in the market, but the whole philosophy is let's think about the market in terms of years, in terms of decades. Like my goal is I really want to put up a really good 30-year track record. So that is my focus.
Nice. Yeah.
This contest is basically like my coming out party, so to speak, where it's like, okay, let's really do this. So for the first quarter of the year, January was fantastic because everyone was super bearish on the market. And it was like, oh man, the market has to collapse. December was a really bad month for technology. So one of our key themes heading into the year is we're probably going to see some mean reversion within tech. So like when we were coming into the year, I was sharing with my clients that like these mega cap tech companies like Apple is trading at like a 12 PE ratio, or like, Microsoft is at like a 10, or like it was really crazy where like if you had just bought that business right there and held it for the next 10 years, like you're very likely to get paid on that investment. So we were pretty big in technology in the first quarter. We caught a really nice power earnings gap setup in this ticker AEHR. It's a semiconductor small cap stock.
I know that
And
one very well. I traded that
mhm.
one as well. Great
Oh
one.
yeah, that was a really good one. And then we played both sides of the market. So like in February, there was a really good short setup in the market where everyone was getting long and everyone was on one side. And we caught a really nice short trade in February. So that was actually like a poor month for the market, but we did pretty well that month. And then in March, we really just focused on the banks and really just this theme that all the banks are declining, but the business fundamentals of all these banks are not declining. And we were able to catch some moves with that as well. So yeah, so far it's been a good sequence.
Love that. You applied that contrarian thinking. You saw the crowd going one way and you went a different way, and you looked to the details, not just the headlines. And that's so important.